We've got Sumeet Jain now joining in. He is CLSA Senior Research Analyst. Thank you so much for joining in. Let's talk about how you're rating the demand environment on a scale of 1 to 10, 10 being the highest.
I would say, the demand would somewhere lie in the top half of that scorecard. So maybe around, 6 to 7, where I guess, the second derivative of demand is clearly on an improving trajectory. So the growth this year, if you look at FY25, is obviously better than last year, which is reflected in the guidance of both HCL and Infosys. And I believe in FY26, the growth will be better than FY25. Reason being, we are seeing initial signs of improvement in demand in the BFSI sector on the back of softening of inflation and interest rate cuts in US. Secondly, in the September quarter just gone by, if you look at the top 6 US banks, they have actually increased their overall headcount after a gap of 6 quarters. So clearly, the discretionary spend or, the IPO activity is clearly coming back for the US banking sector. And generally, we have seen in the past as well, whenever discretionary demand revives across the sectors which are more interest rate sensitive, BFSI is typically one of the first ones to see that recovery. So I think I will not be surprised if, in CY25, on the back of further interest rate cuts and, stabilization and inflation, we see discretionary demand recovery in the other areas as well. And then, FY27 or calendar 26, we believe should be even better. By that time, we have, the corporate tax cuts proposed by Trump administration will get enacted. The SAP migration opportunities clearly there in the key sectors like manufacturing and oil and gas. And, the jury may be out on generative AI as well, how that scale up will happen.
Right. So, Sumeet, are we looking at double-digit growth in FY26 too?
I don't think double-digit in growth will be there in FY26. And the reason for that is you look at the large deal win activity by most of the Indian IT companies. And in the last 2-3 quarters, we have not seen that, on a very strong growth trajectory. So clearly, I think from that perspective, if the discretionary demand, let's say, doesn't revive based upon our base case assumption, you don't have very large deal wins to ramp up and, cover that loss in discretionary spend. So I don't think double digit is going to happen, but maybe, somewhere around for top 5 IT companies, on average, a 6-7% kind of a constant currency growth. That's what we are currently building into our estimates. But yeah, I think maybe better growth in FY27.
Right, and while demand is good, the stocks have run up. So where is it that you're seeing value then?
Yeah, no, great question. And I think where we see value is one, of course, is Tech Mahindra, where that is one of our top pick in the large cap space. And the reason for that is a very sharp margin expansion we are expecting over the next 2 to 3 years in line with the vision by the new management. So I guess irrespective of the macro, they will deliver on the margins front. And that's where on a relative basis, if you look at FY27 PE multiple, Tech Mahindra on our estimates, and we are not very different from Street, they are trading at around 20 times FY27. Compared to that, companies like Infosys, TCS, HCL are trading somewhere in the range of 24 to 26 times for a much lower earning growth trajectory. So Tech Mahindra is clearly one name where we see value. And then from a earnings compounding standpoint, Persistent is another name where we are positive on. It's not a value stock by any metrics, given they are trading at around 50-55 times 1 year forward. But I think they have a very unique business proposition, 50% of business exposed towards product and software engineering, which is one of the highest, not just among Indian IT peers, but even the global IT peers as well. So we believe that, mid to high teens kind of top line growth and the earning growth is easily possible in case of Persistent for next 3 to 5 years, And if the multiple stays at the same level, which we have seen in the past, if you continue to deliver in that ballpark consistently, the multiple sustains and the stock returns are equivalent to the earning growth. So yeah, Tech Mahindra and Persistent are two names which we are quite positive on, both from medium to long-term perspective. And Wipro is another name where tactically we are positive because of the change in the top management and I think hunger to deliver results in the near to medium term.
Right. And what were the key discussion points amongst investors and corporates at the conference?
Yeah, I think a lot of buzz around, particularly what happens after President Trump getting elected, how will Trump 2.0 play out for the Indian IT sector. And, we hosted the newly appointed NASSCOM president, Mr. Rajesh Nambiar as well today. So I think a lot of questions around how Trump 2.0 will play out for the Indian IT sector, where, I guess the common consensus was that the corporate tax cuts proposed by him will be clearly positive for the discretionary spend revival. And on the immigration side, it will not make a huge dent to the industry, where, he is focusing on the illegal immigrants. Yes, I think some screws will be tightened around the processes and the procedures, but the Indian IT companies have very well positioned themselves to locally hire as well as focus on nearshoring. So yeah, clearly I think US election outcome was widely discussed. I think the other thing was with the recent increase in the US bond yields is that momentum around discretionary spend revival in BFSI still playing out. So I guess, we are just into second month, or rather just 1 month after the earnings season. So the commentary has not changed much on that front. And then, of course, I think generative AI, the jury is still not out. I think the BPO sector is clearly seeing tailwinds of generative AI, very contrary to the initial negative expectations for the sector, given that it is highly labor intensive. But yeah, I think the jury is still not out how generative AI will hit the regular IT services sector, given that we do not have very scaled up use cases of Gen AI yet in the enterprise world. So yeah, I think these 2-3 aspects were the most widely discussed.
All right. Thank you so much for joining in. Good to get your take on the overall markets and macros.
If you like this video, then like, share and subscribe to ET Now.